Yeah, yeah,
Okay.
exactly.
Love that. Good. I can see people are firing questions in. We will come.
I know. I've got no chance of reading all that unless I lean forward.
Don't worry. Don't worry. I've got it covered. Don't worry. So, where are we? This one, interesting one here. So from Jose, I feel like I'm not progressing. What can I do if I keep giving back profits I seem to make? There's a lot of assumptions in there.
Oh, okay. So, Jose, well, obviously I don't know what your strategy is that you trade, etc. So I don't know the details of it, but I'm going to assume that you have back tested it. So if you haven't back tested it, then you need to back test it, because you need to find out from your back testing what your worst run is, and your win-loss ratio and the trade frequency, and your average risk to reward. And only once you have those benchmarks will you then be able to look at your live trading results and compare, because it could be that your strategy is never going to make money, never going to make money. It might not be a profitable strategy, and you don't know that until you've done the back testing. It could be that you have happened to start trading your idea and it's hit a winning run, and then you're hitting your drawdown run, which is greater than your winning run, and therefore it's never going to make money over time.
Exactly.
Okay, so it could be that you're missing trades, so therefore your trade frequency is not up to what your back testing said it should be. Or it could be the other extreme and you could be over trading it. But the only thing, look at it as like you've got to find evidence. Everything trading is evidence in my book, and you're looking for as much evidence to support your who you think done it, who murdered it was the butler or whatever. But gather all your evidence and analyze your evidence, and then hopefully you'll be able to see, A, it's my strategy, it doesn't work over time. B, I'm breaking my rules because my strategy does work over time, so therefore you must be breaking your rules. How am I breaking my rules? Or C, I'm over risking because you've not done your risk calculations correctly. There are many things, but the first thing you need to establish, Jose, is whether it is actually a profitable strategy.
Brilliant. And I love it. You said about risk to reward and trade frequency. Essentially, the question you've got to ask, is it the strategy, or is it you, or is it a combination of the two? It's basically what you've got to establish. And what Kerry said there was so important, is that you could be in a situation that you're giving back profits on a strategy that you shouldn't even be trading anyway. Or it could be that the strategy is having natural drawdown periods, but because you don't like losing, you're over leveraging. So actually the strategy is going to give back some of its profit, but because you don't like losing or you over leverage, you give back all of it. So a lot of people aren't able to ever make that correlation. What's the strategy's equity curve and its drawdown periods versus your drawdown periods? Because all it could be is that you're not managing risk, like you said. So really, really good example. Really good answer.